Hey up everyone, welcome to Martyn Lucas Investor Channel. I'm Vaz. Do you know what time it is? It's time to start talking eVTOLs. Welcome to the second video of my little mini-series, or build-up mini-series as I call it, to the fourth quarter 2024 earnings for Archer Aviation. In the previous video I gave you some insights and something we can possibly look out for in the coming earnings call. Now I would like to give you some most recent news and some facts. Well, let's get on with that, shall we? Very significant news. 11th of Feb 2025. Archer raises $300 million from leading institutional investors to accelerate hybrid aircraft platform development as defense opportunities look stronger than expected. What does it mean? That means we have raised over $300 million through private offering, subject of 35.5 million shares at the price $8.50 per share. This gives us fairly strong institutional backup now. We have Stellantis and United Airlines for the civil sector. We have BlackRock, who grabbed the biggest chunk of the most recent offering. We have Wellington Management, and we have probably the most targeted customer or most prioritized customer, Abu Dhabi's 2.0. Why did we need to raise $300 million? Well, that's because of partnership with Anduril Industries. Anduril Industries are a significant player on the defense and military market. They are being fairly aggressive and they are trying to get to the top of the food chain in the coming years. What does it mean? We will be developing a new platform which can potentially replace the existing eVTOL and maybe some application of helicopters as well. If you look at, for example, V-22 Osprey, as the big airplane which has got the propellers which can tilt up and the aircraft can land as a helicopter. If you look at this vehicle, it's one of the most expensive carriers in the military in terms of maintenance, operations, in terms of maintenance and operations. If you can develop a hybrid platform which will be significantly cheaper and probably more reliable as well, and we can sort of tailor something for our needs, there is a big opportunity. However, short term, I wouldn't pay too much attention to this. Long term, definitely. Short term, if you look at current environment and the sort of ADHD mode when it comes to anything planning for government, also in past month and probably the coming months as well, and also the Department of Defense announcement that they'll be cutting their budget in the coming 5 years, 8% annually. This doesn't look as hot as it looked a couple of weeks ago. So it's positive news, definitely, but I wouldn't pay too much attention to it short term. I think Archer need to focus more on the civil sector at this point. But we'll definitely see some update in the coming earnings call. We also got some guidance on positive financial outlooks for the coming earnings call. With the most recent acquisition of $300 million, the balance sheet looks very healthy. We should have over $1 billion or around $1 billion on the balance sheet. We also got some guidance or indication on GAAP or GAAP operating expenses, which are expected between 120 and 140 millions, and the non-GAAP or non-GAAP, whichever you prefer, operating expenses between 95 and 110 millions. This was sort of in line with the guidance. What is very positive to me, the current quarter, the expenses are not expected to massively increase. That looks to me like very healthy managed company. I also tried to find some real value or some face value for the estimated earnings per share, but I found various values. The most common one was 0.29 negative. And finally, let's just remind ourselves, VAS eVTOL Manufacturer Index. What is a VAS eVTOL Manufacturer Index? Well, if you've been watching my previous videos, you've already seen this and you've already sort of got a grasp for it, but I will explain this to you again. Since eVTOL market is an emerging market and we are sort of, it's the race to the top. It's not, it's quite difficult to establish position of each company. We don't have this luxury as we have, say, in aircraft manufacturing industry, where, say, Boeing, Airbus, maybe Lockheed Martin, they are the god tier, and then we sort of go down, tear down all the way to the local manufacturers and startups. Same as for manufacturing industry, you are able to establish position of, say, Ford, Honda. You would have been able to establish position of Fisker at the time being. We don't have this on the eVTOL market. So I have been working on an index which consists of 4 different indicators, which are research and development progress. We are at, sorry, I forgot to mention, we go from 1 all the way to 10. 1 is the lowest, 10 is the god tier. So we are at 8 out of 10 for the research and development progress. We are in pre-production engineering. For production capability, we are at 6 out of 10 at low rate production. This is what I mentioned in the previous video. We are looking at, or we were looking before this earnings call, at about a couple of vehicles a month by the end of this year. That is what low rate production means. In terms of certification progress, we are looking at 7 out of 10 advanced certification testing, which I also mentioned in the previous video. We are very, very close to the all-out certification by the FAA. And for the market engagement, we are at 6 out of 10 pre-orders and early sales phase. I hope you found some useful information in here. I think we have already established that we are covering the 4th quarter earnings on this channel. It will be on Thursday after hours. I will be part of it, so I'm looking forward to see you. You will see tomorrow, look out for another video where I will be quickly discussing potential positive and negative outcomes of the coming earnings and how it can affect the stock price development. So that's it for now. I will see you soon. Take care of yourselves and each other.